Okay, good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, November 2nd. Super Thursday here with the BOE interest rate announcement that we just got, guys, as well as the inflation report. We'll go over that momentarily. Michael Boutros here with you this morning, guys. Good to see you. D, Gary's in the house. Katarina's here today. Mark, Peter, Tom, the whole crew. So good to see you guys all in the room. Interesting developments this morning. So obviously, we'll start off on the pound and where we were looking at yesterday. We got a hike. We talked about this yesterday, kind of where the market expectations were all over the place, but we got the hike with a dovish tilt. You're hearing this all over the street right now being called a dovish hike. And essentially the main takeaway that markets are running with is the language that they had in there suggesting that they may need to hike interest rates more than markets are expecting. That language was removed. There was some misunderstanding, I think, on Twitter, and some of these people misunderstood what the statement was saying. That's actually what the omission of that statement is what the markets are actually moving on. They did cite concerns about Brexit. They did cite concerns saying that while growth is strong, that that threat remains, and inflation is starting to uptick as well. So kind of leaving the door open for maybe holding on rates. Remember, this is the first time they've hiked rates in the UK in if I'm not mistaken, 10 years. I think 2006, if I remember correctly, was the last time they actually hiked rates. So one and done type deal, maybe not that aggressive, but certainly definitely tempering expectations for the markets by removing that commentary, and you're seeing the pound move off. Now, it did break below our near-term bullish invalidation level. We had two setups yesterday on the pound dollar and the pound yen. Pound yen is what we cited as our favored one in the event of a pound weaker story, which is what's materializing here, just based on where we were in the longer term charts. But to stick with pound dollar real quick, we have broken below the near term bullish invalidation. That was 131.65 for me. So I'm on the sidelines here. I was looking to see if the drop would give us some sort of support. We just sailed right through. So all is not lost just yet. I'm going to bring your attention again. We're going to start from top down. The weekly chart really continuing to highlight this key region, 130.36, the outside or the reversal high week that we made back in July, the high week close. Saw perfect support there. You have the lower parallel, and that's just lower. So 130.36 on the near-term charts shows up as 130.20 as sort of the end-all. If we break below that, a run into the 52-week moving average, former trendline resistance wouldn't be outside the realm of possibility. That's way down at 27.90. Not my favorite scenario. 130.20, still my line in the sand. The weekly close below this is really what's needed to invalidate the broader uptrend we've been working with off of last year's low. Okay, so despite all the price action and all the headlines that are crossed right now with this being so dovish, quote unquote, keep your eyes on price. Okay, that's what we're going to be focused on. So we're heading lower into that support structure. Here's what the pound looks like on the daily chart. And again, highlighting that basic slope support off last year's low, that still leaves room for a move lower. And again, like I said, 130.20 comes up as the 38.2 of the yearly range. They have the October opening range low, which never gave out. So remember, we're coming into the open of November trade with an eye on the October opening range, which never gave out. So, the 100-day moving average is still just beyond here at 130.80. So my point is this, guys. You're not going to try to play hero here and try to catch a falling knife. But at the same time, I'm not getting on board here with any type of short exposure at this point. I want to see if we get a drawdown lower, 130.80, specifically that 130.30, 130.20 region. If we get some sort of exhaustion near-term price, that's where we would look for major support here. But I do want to see how the U.S. Open looks on pound. Here's what it looks like on the intraday. So there's the formation that we were looking at, and this is what we highlighted last night. Okay, so the break below this sort of invalidates things. Be on the sidelines right now. There's, again, your monthly opening range lows, your 38.2. That's kind of the region I want to see some support in price. Now, for argument's sake, let's say we hold this here. Okay, and the U.S. trade session comes in, and this thing starts to rally. Well, Mike, are we going to miss the long exposure if that happens? Possibly. What we want to do is if it pops back through 31.65, look for a pullback again. I wouldn't just buy that pullback. I would look for another drop so I can take a respectable stop against this swing low, and then I'd play the recovery. Other than that, you have to wait this thing out and see if we settle. If we settle above 3060 or 3020 rather. Keep in mind that we still have on tap tomorrow non-farm payrolls. As I noted in the report last night, guys, it did leak out that looks like Trump will tap Jerome Powell to be the new Fed chairman. As far as the outlook for monetary policy and what that means, not really expecting any major shifts. He's kind of going to hold the course. He's someone who's been an advocate of a real gradual return to normalization, and has been a big advocate as well for regulatory reform. So both things that the markets wouldn't necessarily get skittish at. He's not in a hurry to hike per se, so there's not really been much of a market sort of breeze on that news. If there were going to be a much more radical pick, or if it was outside the realm of the pool that the markets were looking at, you would have expected a much, much larger move. Remember, Fed Chair, they're dealing with extraordinary measures. The measures that were implemented at the height of the crisis have never been seen before. So the unwind of this is really a very delicate process of how you keep markets afloat while at the same time not overheating things and essentially fueling an asset bubble. So with that being said, that news is likely not to be the major volatile event that we thought it might. So keep that in mind. I think the actual official announcement is expected to come today at 3 p.m., if I'm not mistaken. So keep an eye out, but again, I don't think we'll see a much of a market reaction. I think overnight we kind of digested that news. So it puts the emphasis back on NFPs to close out the week, and that's really going to be the last event risk. Remember, we're just opening up the monthly opening ranges, guys. So if you didn't get involved in anything, or if you haven't got a chance to get in many of these trades yet, we'll get tons of opportunity. Let's just see how this pans out. Let the dust settle here on pound before we get involved in anything too intense. Any questions on the sterling? There's a 7-2 count as far as the rate hike was concerned. So the 25 basis point hike, two voters dissented on the MPC. Kind of shows you where they are in the grander scheme of things, but the removal of the language is what people are running with as a dovish tilt. Okay, so I'm going to go ahead and remove this pitch right now. I kind of just wanted to keep this here for your reference from last night, but we're going to go ahead and remove that to keep things clean. Drop these levels. This 100% extension will be null and void if we do break this low, so keep that in mind as well. But yeah, I want to see if we can find some support in this pocket here. Any questions on pound? So, like I said, yesterday we highlighted 2 pound crosses. This one was the one that was favored for the long side. We've been looking for a favor on long side here. And again, 30-20. Okay, that's my line in the sand. Pound yen was the one that we had looked for as the possibility to play on pound weakness. This thing would, I thought this would perform a lot better if we got a bearish reaction. And in fact, we did. One of the main reasons that this was looking so appealing to me, pound yen, again, you'll hear it very oftentimes me call it the widowmaker. It's a notoriously larger ATR swing, and it has the abomination on the other side. So why not, right? But here's what it looks like on the weekly chart. A basic 38.2 retracement. Again, I don't really, want to be so strict on it, but it dropped from that 2015 high. It came in right on 151.95. So it gave you basically a 152 barriers resistance. We came right into it earlier in the year here. We pulled back. Unable to close anywhere near it. You also have some basic slope. I'll show you the slope in a moment that you're looking here. Is a basic slope support. A couple of parallels have been very, very effective in calling some major key breaks as well as pivots in price. So we were testing the upper side of that region too. On the daily chart, further highlighted that region with the 38.2 and a near-term slope just off the June lows. Okay, and that one gave us the median line right there as well. So you had another confluence region of possible resistance. Take this into the intraday charts, and you had another near-term Fibonacci consideration, the 1618 off the low. This is the same chart, guys, that we visited back on the 23rd of the month. If you remember back then, this is where pound yen was at. We had just broken the upside of this slope. We were looking at buy pullbacks for targets up into 152. Well, we made it into 152, and again, that was the resistance region we wanted to be cautious of. So fast forward to where we are now, and the threat looked like the reaction there looked like this thing wanted to break lower. Momentum broke right back below 70 on the overbought signal there. Monthly opening range highs from October, which we spiked through once and failed. We're right there. A break below that, and you're looking for basically for 150, 50. And the major key support is objective, the weekly opening range low, which happens to be the 38.2 retracement of the decline, and a very nice pivot in price. So pound yen is the one that actually panned out better on the short side today. Here's what pound yen looked like. Well, let me show you that weekly chart first. I think it's pretty telling on this one as well. You know, there's the tap and there's the pullback. Couldn't get more cleaner than that. So this slope that I'm looking at here, just to remind you guys, basic slope support. Okay, 3 tag touch, so it's confirmed. This is off the 2011 and early 2012 lows. It caught the low perfectly last year. A parallel of that extended off the high from 2011. It was kind of messy here, but the break certainly saw acceleration. We saw failure just ahead, and again another failed attempt here. So kind of an important region. Now on a topside break, you still have to contend with this confluence region, basically at 154.70, at 154.60. This region right here I noted, which would be just basic upslope for the yearly slope that we've been working with here. But long story short, you know, the top side, near term, at risk, testing resistance. Here's what it looked like on the daily chart. Okay, and that level, again, on the daily chart, as we noted, the confluence with the median line, basic upslope resistance, tagged it once, really nice pullback, tagged it twice. On this last rally, seeing divergence in daily momentum. Price action making a higher high, the oscillator making a lower or equal high. It actually is a lower high, and kind of struggling right at the 60 mark here, suggesting a bit of a change of behavior near term. Okay, now we can't get too ahead of ourselves. It's panning out nicely. I do want to look to take any profits right around this spot right here, guys, this basic slope, which has been offering some decent play. Obviously, the upper 50 line didn't help, but the median line's been rock solid, and again, the 50 line has been a decent gradient. Also, the break seeing acceleration on the upside. So I do want to look for initial sort of wrap up any shorts they have sort of around here. We can look to reassert it on a bounce, but here's what it looks like on the intraday. Okay, so excuse me, this is what I have last night, the 240? The 120, perfect. So there it is, kind of a bounce. You look for, couldn't even make that rally. I initially saw the hike. I thought we were going to rally, but it was very, very tepid. And as soon as you see that move, something's wrong. If it really was going to be a hike, it should have just kind of been a run. Obviously, the language was the caveat here. The breakdown, there's 50, 48, 50, 50, I think is what I noted. And last target, 49.20. That's what I was saying. You probably want to look to wrap that up. I think I had 49.21 on there, which is the exact 38.2 retracement. Remember, objective, weekly opening range lows. The weekly open, the actual concerted weekly open comes in right at 149.18, so just below that. And the range lows for this session. So you can see a decent pivot there in price. Fibonacci consideration. Looks like a nice spot. Looks like a nice spot. Any questions on pound yen? So on a rebound, so what I was going to say, so how do we play this if we didn't get in on the short side? We'd like to get in. I want to see structure. Just like 130.20 is our line in the sand for the sterling, guys. On this one, remember, we're still in the broader uptrend. We're coming off of uptrend resistance. So while the short looks sweet here, for us to shift that broader focus, we need to see a move sub 49.20. If we were to see that break, it would suggest, okay, a little bit more of a significant high is in place, and you look to reassert a downside move. From here, on a rebound, where I would want to see failure somewhere around the 150 handle, the former opening range highs for the week. Like I said, I want, it's way too early for this, guys, but I just want to see structure to the decline would always be something that would give us a little bit more conviction. So it's way too early to work with something like this, but even if we were to spike lower into something like that and recover, that might be an opportunity to try to look for a short back at the 50 line. But as it stands, look for a reaction at 49.20 near term. Okay, that's where we could produce a bounce, and at the same time, that's the level if we break below, it puts more emphasis on this being a decent high. Look for a move basically down to this key region. Former high day close, basic 38.2 retracement from the advance off the August low. Questions on pound yen? That was number 2 from last night. Okay. Let me segue real quick into the dollar index, and then we'll come back to the Aussie and the dollar yen. Obviously, tomorrow is non-farm payrolls, so we are expecting a pretty decent, hefty print of 300 plus. Here's what the DXY looks like. You're seeing a bit of a pop here, but despite all the nonsense and noise and hoopla, the dollar's pretty still clean. Okay, I'm gonna drill this into your head. The weekly chart for the index, still holding resistance. A weekly close above this threshold is necessary to really validate, a head and shoulders measured move, or even a more extenuating breakout towards that. Even if we were making to the 52 or the 50% moving average, 52-week moving average, 50% retracement rather, that still takes you to like 97.40. Not my ideal scenario. Right now we're still at resistance and the focus is against this region. Daily charts, okay, momentum is looking a little tired here. I was looking at this trigger. I'm not really huge on using them too aggressively on these types of moves, but it does look like it has a couple of touches there. And you're still looking for possible exhaustion here. Okay, on whole, well, let me step back real quick. 94 into 94.20 is going to be the key support barrier you need to break right here. Major pivot in price, former monthly swing highs, basic 236 retracement, you name it. 100-day moving average, all right there. Take this into a closer near-term chart. It really just highlights a very clean weekly opening range. Here's your weekly open, move lower, check the weekly open as resistance, move lower, look where we're finding support, or look where we found support last night. This slope is just ridiculously clean. All extending off of the lows we made back here in September. A parallel off that low, again, resistance, support, resistance, resistance, break, saw acceleration. Look at that touch of support last night. So it puts the emphasis on the weekly opening range. Very, very simple. And heading into some major event risk, US event risk nonetheless, kind of want to keep this in mind. So this is just your weekly opening range high. And your opening range low is obviously going to be the low that we made last night there. Just below that 94.20, 94 region of resistance. Okay, so just keep that in mind. That's kind of still the pivot break that we need to make to get this thing. Let me move that level here. There we go. That's the break we really need to get this thing going. For a target initially at 93.57, and then that's the break that would validate the high. But as it stands, you just rebounded off uptrend support. You're holding within the weekly opening range, and you got NFPs on tap tomorrow. Expect some fireworks. Questions on the DXY? All right, moving right along. That was number 3. Number 4. And here is one from last night. And this is another one that we've been liking the whole week. It kind of took a little bit longer to start to pan out, but you did see a topside break. Now, it didn't quite get into target before turning over. I don't want to necessarily give up on it yet, but we've continued to highlight the critical nature of the support region that we're coming at. Again, the weekly charts speaking monuments here, about where we are. You guys have seen this. Again, I don't want to keep boring you with the same information, but 618 retracement, 38.2 longer term retracement, basic slope support, upslope support on a longer term scale, 52-week moving average, all is right here, all into this 76.32, 76.27 level. So, look, I don't want to be, again, the one trying to fight and call a high, or call a low rather, but this, if there's going to be support, this is kind of where it would need to initially start to come in. On a downside break, there's nothing until 74.75, aside from a basic 50% retracement. It's a basic slope support. And we've already talked about how the slope has been pretty fruitful, whoops, as is. Okay, so you have the contingency plan on a break below our near-term bullish invalidation level. At the same time, you're looking for exhaustion, at least on a little bit of a rebound, and that's what we're getting. Here's the Aussie on the daily chart. And again, here's what we looked like last night as we were coming right off of that 618. Again, we talked about this in the webinar. I think Pooja, if you're in the room, there she is again. Yep, you pointed out that near-term slope. We kind of broke the median line, so I didn't leave that on the charts last night, but we talked about the fact that median line was still right at the 200-day moving average. So that's why I really wanted to put emphasis more on the weekly opening range, which was just above support. And like I always say, those are typically gonna be my favorite plays. Okay, when a weekly or monthly opening range is just below resistance or just above support, typically the break of that near-term range will fuel a bit of a play. So, our favored move was a move to the upside for a recovery. If we break below 76.30, like I said, there's really nothing until basically a 75 handle, and that's going to be a bigger sort of last-ditch effort. But for now, this is kind of where we want to see hold support. The upside resistance level is the 2016 high day close. And it's a year later, almost over a year later, but that level has still continued to serve as a major resistance play. We got one close above it since. Resistance start off the year, resistance once again, the break fueled a massive acceleration. On the bottom side, again, that 2016 high day close was support, rebound, break saw acceleration. This is your first major test. Okay, on the intraday chart, here's what Aussie looks like. Levels are ridiculously clean, and that doesn't happen too often, but here's what it looks like. If my chart wants to open, there it is. So the support bounce, okay? Yesterday we highlighted, look, we've been wanting to play the upside, but we really need to clear the weekly opening range, and that's at 77, essentially. Excuse me, yeah, 76.99, right? And the key support barrier was right there at 76.32. So you're looking to buy within this range, ultimately for a topside break. If it breaks below that, sayonara. Near-term move would just be 75.66 and 75.17. So you got the upside break, and we came back, tested that opening range resistance as support. Still looking for that stretch into 77.35, 77.43, top side range of resistance here. Okay, again, that's a 2016 high day close, 77.35, and a basic 236 retracement of the decline off the highs from September is basically 77.43. Okay. So look, key support's still 76.30. That hasn't changed, but we do want to see a target into 77.35. Hopefully, a break above to really validate this low for a larger recovery. But at the end of the day, we're still in this downslope. We need to compromise some of these near-term resistance to get the conviction of the turn. Any questions on Aussie? Going once, going twice. All right. That is number 4. Okay, next up is dollar yen. So here's the abomination and what we look like. It's losing steam. You need patience for it. The weekly charts, I don't think we were focused on too much for dollar yen, except for a basic 618 that's kind of been rock solid since the low that we made, 114.32. We've been talking about this barrier of resistance for a while, and this is what we wanted to see for the kickback here. Look, you're playing with matchsticks, in my humble opinion, if this breaks above 14.30 rather. There's, at that point we can derive some new targets, but just looking at this on a whole from a just larger, 10,000 feet on the weekly chart, you have to respect rather this resistance here. Okay, and you also have to respect if we break and close the week above, it's going to go higher. My inclination is still to see if we can get some kind of move lower. Here's what it looks like on the daily charts. Again, 114.29, 114.36, the actual swing high they made back there in May, poked through it back in July, again, has been resistance all last month through the month of October, and the November opening range looks like it's pushing right into this region. Just higher, you have slope. So, this formation hasn't been necessarily the most fruitful, but certainly when we took some parallels off it, it literally has been guiding the highs all throughout the advance since September. So, even if we push higher, it's like 1466. I don't know what to do in that region, guys. It's not a play. Beyond that, you have the topside breakout targets. But until we do that, until we were to break this key zone, whoops, I just, I can't get excited about the long side. Here's what it looks like on the intraday. Also note that on the intraday, on the daily chart, we were scoping this out earlier. You don't necessarily want to call this divergence, but certainly on the last two highs that we're making in the eminent advance right here, this would be considered divergence. You have a higher high on a closed basis. Momentum is not. So these subtle divergence signals tend to be pretty decent. And again, possible near-term trigger here in momentum you might want to keep an eye on. All right, now we'll jump into Euro Yen later in the session, and that kind of broke higher than I wanted it to, so I'm not looking at that anymore as well. But if we do see this start to materialize, yen strength, i.e., on the pullback, it might help us out on the Euro Yen again. But with that said, here's what the daily chart or the intraday chart looks like for dollar yen. Heading into NFPs, again, typically a trade that gives you a lot of volatility on U.S. data. Keep an eye on that key topside region, 1436 into 1450, major resistance. It's now the weekly range highs. Obviously now it was last month's previous monthly high, so another just basic objective way to look at it. Yesterday we brought up the bullish invalidation level to 112.95. You can creep that up a little bit. You basically want to keep it along that lower parallel. But the objective weekly opening range low is 12.95, and that's kind of why I put that on there yesterday. So your weekly open taking place just below resistance, and the November opening range just below key resistance. Topside break target's pretty clear if we do that, 115.50, 116 essentially, but you have to respect that resistance until we make it through. All right. Again, the data tomorrow on the NFP print, it's expected to be pretty strong at 300. Like I said, that's off a really dismal read the month before of a negative contraction at 32,000. Don't forget that. But unless we see a big miss, I'm not really sure you'll see too much volatility because everyone's really focused on now who the new Fed chairman is and all this. The inflation outlook is really what matters. CPI is on tap later, so in the month we might get better read on that. But in the event of a miss, it could help us fuel this dollar pullback. Number 5. Any questions on dollar yen? Okay. Number 6, Kiwi. Here's what New Zealand dollar looks like. So earlier in the week, we were really focused on just a very simple play off of key support. So again, the dollar yen levels from last night unchanged, guys. Moving into the previous update, Kiwi. Really, we started looking at Kiwi earlier in the month on the 31st. And here's what it looked like. Or earlier in the week, rather, excuse me, the 31st here. This is the key support barrier that we were talking about. It comes up on all different time charts. The weekly chart has it as the 2016 open. It is also the objective yearly opening range low that we made in the second quarter. And the low day close for the year also converged in that region. So we were looking for near-term support there. At the end of the day, if this upslope is truly compromised, which I'm inclined to think we are. It's a 3-point touch support. On the break, you did see acceleration. You have a Fibonacci consideration there as well with the 38.2, and this is also a 100% extension of the decline. So I'm inclined to look lower below 70.40. okay? 70.38 is to be exact from a weekly standpoint. But that doesn't mean we can't bounce from here. And that's kind of what the premise of the trade was earlier in this week. We were looking to see if we can't find some sort of rebound here into near-term resistance would just take you at least 69.20 at least. If we went down even deeper into the near-term charts, there you had 69.20, and just higher, you had that perfect median line off the high. It comes in at 69.70. And that's kind of where I want to cool my expectations. I don't really know if I want to get too aggressive on a larger bounce from there. But we haven't quite gone there either. So here's what it looks like on the intraday charts now. First of all, the weekly, again, there it goes. You know, objective, right? Not my opinion, not Jamie's opinion, not anything except what the markets are showing in clear-cut price. Take into the daily chart. There it is again, the 2017 low day close, low week close, and the 2016 open. Nice pocket of support. In fact, the swing low was literally, I think, to the pip, guys, the low that we made there back in May. So here's the initial rebound. 69.20 did get taken out. A little bit higher comes that median line. The intraday chart, again, shows that we had 69.60 as the target. But I would choke that up just a little bit, guys, to respect that median line. You've seen some decent play against it. The break saw acceleration, break saw acceleration. Same thing on this side. Just keep an eye on that on that focus region. And again, the 70 handle is the bearish invalidation. As long as we stay below that, I still think that the broader trend still needs to respect to the downside. And that's here. Okay, so near term, yeah, I think you could probably get a little higher. From right here, you did mark a very, very clear and readily identifiable divergence mark when price action making a higher close, the oscillator making a lower high. You know, it does leave the fact that you could see a little bit of spillback here, but I still like, you know, a basic scenario for a topside run into that median line. If not 98.70 per se, you know, wherever this is in time. You know, 69.70, maybe 69.55, 69.50. The thing that would be a little bit more convincing that we have a major turn here would be 70. I don't foresee that happen, but if it does, you know that you have a bigger play, a bigger reversal play here because of the longer standing trendline support that we were looking at on the weekly chart. Okay, if we break back above it, that changes things. That changes things. So another one that panned out pretty well. I've been very, very cautious and super light as far as leverage on this one, on anything to the long side, just because, again, it's a pretty strong downtrend. It broke major support earlier in the month. I guess I should say last month at this point. But near term, it does look like it can get a little bit more of a boost on that pop. Questions on Kiwi? Okay, next up on tap is dollar CAD, and this one's going to be important heading into tomorrow. Dollar CAD double whammy. You get the non-farm payroll reports here in the United States and the Canadian labor report at the same time. Likely to chart some serious volatility on a miss on either side. A lot of, again, divergence in the releases could really offer some nice price. But with regards to dollar CAD and where we're trading, you know, the focus for me, or the focus that I've been talking to you guys about, has been this 29-27 region of resistance. It's the 50% retracement of the yearly range, objective. You have the initial yearly opening range lows just higher. Okay, it's like 29.68. And even above that, you have the 52-week moving average. So you don't want to fight it. Once you crossed above that red line a few weeks back, we talked about the fact that there's more upside here to go. You know, that was kind of a big break, but if we were to break back above, changes our opinion again, right? Market changes, we change. So there's the focus into this region now. You're looking at this is the major range of focus. Okay, that former slope, I'm still paying very close attention to it because you got a rebound, a break saw acceleration on both sides. So you still want to respect that. And you're looking at major resistance here at 129.27 still. So heading into tomorrow's non-farm payroll and Canada employment report, Here's what it looks like on the daily. So again, the 50 line for the current operative larger slope here that you're looking at comes right there. Current upslope, this is just basic trendline support off these two lows. The extension off the high caught this very well. Break, came back as support, came back as support. Look what's happening here. If we make a daily close today below this level, suggest again a little bit of a near-term exhaustion play. You did have some divergence onto those highs, albeit a very weak signal because it's above 70, but it's still there, right? Something to take note of. And just a basic rebound play would take you into at least 27.78, 27.23 as initial downside targets. And you have the top side range in the event of a breakout. This is the major critical resistance for dollar CAD as far as invalidating the broader downtrend off the yearly highs. That's the 200-day moving average, that basic slope resistance, and current upslope resistance. So as we always note, a break of upslope resistance typically would fuel the sharpest part of the move, as if this wasn't sharp enough as already, right? But that's the last-ditch effort. So long story short, if we pull back and break and close below that median line, I would look for a little bit more of a draw to the downside. If we breach these highs, 130.26, 130.20, 200-day moving average, sort of where I'd be looking for last-ditch resistance. Here's dollar CAD on the intraday chart. Okay, the slopes have been pretty clean. Okay, so let me get to the 240s to make this a little cleaner. Basic slope support off the lows, boom and boom. Perfect touch of the highs, break, fueled acceleration. We saw it as support, we saw it as support, we saw it as support. There's the break. We've been working with this pivot around 128.60, which is just basically a swing low that we made back here. But it's been actually like a ridiculous pivot on both sides. Resistance, break, support, break, resistance again. So if we hold here, a break of the overnight lows does shift the focus down into that 127.78 level I was talking about, 127.57, this region. And it would also be an objective break of the weekly opening range low. So that would kind of be a nice, decent, at least near-term conviction for a turnover. But until that happens, your weekly opening range is still preserved, just below resistance. Okay. Questions on Loonie? Could see a nice play here tomorrow. Could see a nice play here tomorrow. Okay. Last couple of things I just wanted to go over real quick. Euro dollar, I still don't like it. We kind of touched on it briefly yesterday, but still not my cup of tea. I'm actually watching this real close into the U.S. Open, by the way, guys. See what happens if we do hold that high at 128.60. I would be interested to see how that reacts. But what was I talking about? Euro. Here's euro. So the near-term picture just is, it's ugly. I don't really have a very strong opinion on this, as I noted yesterday. They talked about the break of that low, in technical terms, really confirming a double or head and shoulders formation break. A lot of people are talking about that. We talked about the fact that because so many people are talking about it, that makes me uncomfortable, which certainly is the case here. But listen, if anything, just levels to know. I'm not really interested in getting involved in Euro too aggressively here, but resistance at 116.78. The 117 handle being not only the 100% extension, but you're basically looking at the 100-day moving average. Okay, so wouldn't put it past this thing to get up into this region. This is not a good play, though. There's just not a good setup. I have, your stop would need to be, well, let's just say you want to be objective and put it below the weekly opening range low. That's down here. It's, well, almost 60 pips away. At the same time, I'm not trying necessarily to jump on the short side just yet and get a long dollar position, um, from these levels. We talked about the dollar index being at resistance, right? So I don't really want to kind of jump into this. So I apologize for the lack of clarity here that the markets provide, and sometimes they don't. On this euro break, if you put a gun to my head, I would think, look for a rally into 117, and if that fails, then you're probably in for a deeper cut near 115, 114.95 is the high day close from last year. But that's just my opinion, guys. I don't really have a technical basis behind trying to actually get into this one. So another one, we'll have to see how it kind of pans out. Even the weekly opening range hasn't been all that clean. Technically, the weekly opening range low is down here. I was using this as the weekly opening range high, so we tried an overnight, failed. It's just an ugly setup here. Levels are clean, but from a momentum standpoint, from a directional bias on the near-term standpoint, it's chop city. So do yourself a favor. I think on this one, it's just better off if we kind of wait for some further clarity heading into the November opening range. Questions on euro? Not surprising with that kind of lackluster price action in euro dollar. Euro yen, that thing kind of teed me off yesterday. So this, the 50 line, the October Open, that's what I want to see hold as resistance. I was talking to Jamie on this. We were chatting it up on GChat yesterday. I was just telling him, like, for me, that's it. I want to see 32.80 hold. That's the October Open. It's that 50 line. If we were going to see some resistance, it's kind of a decent area that you'd start to look for some resistance. It's Friday's high from last week, but we didn't. Okay, long story short, we broke through 50% retracement. That didn't even hold, and we kind of just petered out in the middle of nowhere here near these swing lows before turning over. I don't want to do anything with this here. Okay, and dollar yen's being weird too, right back at resistance, right, guys? So let's not try to fight this. Gunshot approach to my head again, maybe rally right into the upper parallel, if not fail at the 618. But I'm not really interested in trying to get long here. So if we get a good exhaustion signal, great. Keep in mind, momentum still hasn't been able to make it above 60 since the break into oversold territory. That's something to pay attention to, especially because this was the first break into oversold territory that we've seen of magnitude since here. So when we break into oversold, we want to look to see resistance at 60 to suggest that we still have further downside to go. And here's a perfect example in price. Don't take my word for it, right? It's subsequent what happens to break into overbought. When you break into overbought, I want to see hold at 60 as support to suggest the upside bias is still in play. When you break into oversold, I want to see resistance at 60 to see that the downside's still in play. So again, here's an example. We're in the rally. The breakdown broke below into oversold condition. On the rally up, 60 holds, basically suggesting, okay, you're still looking lower. Lo and behold, price action makes a new low. On the break higher now, we're still from oversold. You want to see 60 hold as resistance if the downtrend is still in play. It didn't. Popped. Suggests you're looking higher. So you look for those moves subsequent to the overbought, oversold condition to kind of give you a tell on near term. So here we're still below. Again, I don't know if this is going to be a major turn higher. I want to see this thing lower. We never cleared the October opening range. Puts the emphasis still on a break below 31.65, 31.40 to prove, that we have a larger high in place. A double top measured objective move, if this is just a basic double top formation, gives you a drop into 128.80. Okay, but we would have needed to really see a little bit more of an affirmative close below that 31.65, which we didn't get. So again, one that kind of disappointed this week. I wanted to see that 32. What was it for 32.50 zone right here? 32.80 rather. I wanted to see this thing hold at the October Open, but we'll see how this one pans out. Look for exhaustion near 33.30 if we do get another stretch higher. Questions on Euro Yen? That is number 9. Last thing I just wanted to touch on was crude. I kind of showed you guys this charts earlier in the week, and we have seen a little bit of a pullback off resistance. Remember, 55. We talked about it for a while. The haters hated, but we didn't care. It took a while to finally pan out, but there it is. The good old 55 barrier. You're looking at the objective, guys, yearly opening range highs. You're looking at a long-standing 786 retracement from the decline off the 2015 highs, and the 1618 extension from the advance off the lows that we made back in 2016. So nice confluence region of resistance. Not surprised to see the pullback. I just wanted to highlight that near-term support, former resistance. You have the yearly open, which is 53.80. You have the 100% just off the lows of the year. That's 53.94, and that's your near-term support barrier. So before everyone gets all antsy on this one, just note you're testing support here. I don't want to see any downside below 53.80 if we're still heading higher. Okay. If you do see that break, 52.30 is your bullish invalidation. So even if we were to break lower, this is the broader bullish invalidation for the uptrend we've had off the yearly low. I also want to note one interesting thing that converges on that same level, and that's that basic trendline support off the 2016 low. Not the 2016 low, excuse me, the swing low that we made here in April, or what was that? May. 1, 2, kind of a probe, got messy, but it was resistance perfect in September. The break saw a bit of an acceleration, and that also converges on this same near-term region here. So it's called 53.80 on the downside, the monthly open, yearly open support at this point, former swing highs. That's what you would see to suggest a larger correction to the downside. I wouldn't be surprised, guys, to be honest with you. This is a big, big resistance region, and again, objective. Scratch everything out of your head. It's the yearly opening range highs. Okay, it's the yearly opening range highs. That's crude. And number 10 on the session. Any questions on anything else, guys? We did talk about Ethereum briefly, earlier this week. Just wanted to note that we're still heading towards the range lows, so the emphasis is still on a break of this range. Looks like it's not following suit with the Bitcoin breakout, which has continued just to rocket. That 73.25 soft target, guys, that I threw out, it actually did pan out to be a decent level. Not sure where that 236 came from, but earlier in the week, those were 2 levels that we kind of just wanted to throw out as something to pay attention to. Here's the Bitcoin update from the 31st. Okay, and there's the Ripperoo as we were breaking the 150 line. This is the 1.5% measurement off of this median line formation. There's the break. 7,000. Thought would be a psychological figure. You didn't really see much play there. But the 138.2 of the advance was right there at 73.25. So don't let anyone tell you just because Bitcoin doesn't respect the technicals, okay? Just going to throw that out there. So look, near-term bullish validation and support now gets raised from 55.23 on that trade all the way up into 61.12, or 61.21, excuse me. And that's going to be your key support structure. I really, as far as upside targets beyond here, 8,000, believe it or not. This is complete emotional driven trade from here, guys. Okay, so we even touched base on Ethereum and Bitcoin too to wrap things up for the week. Guys, I want to thank everyone for coming today. If you have any questions, feel free to drop them on the board real quick. If not, stay tuned. We got Jamie on tap with the midweek strategy webinar coming up in just a few hours. So his take on the aftermath of what's happening with the BOE and sort of a preview from his end also on the dollar crosses that we're looking at. Keep your eye on that sterling, guys. Nothing's changed from the broader picture yet. Okay, so price is going to be our guidance, always will be, and always has been, and always will be, rather. So defense is defense. 30-20 is line in the sand. Okay, no other questions. We'll go ahead and wrap things up. Guys, have a great weekend, and I will see you on Monday morning for the free session on Daily FX, and right back here on SB for Tuesday, Wednesday, and Thursday for the intraday strategy sessions. Till then, best of luck trading. I'll have a great weekend. Cheers.